Welcome all to the Node, where we bring you news, interviews, and education Monday through Friday, 9 a.m. Pacific, noon Eastern Time. And well, looks like David just joined us. And if you would like to join the conversation, if you want to come on over here to YouTube, you can find us at the Node Network, all one word. And this is where you can find all of our channels. We are truly a network, still trying to change the Node channel to the Node Network. But you can see that we have, of course, this show Monday through Friday, 9 a.m., The Node, where we bring you education, interviews, and news, daily. We have Crypto and Chill, which is tonight and Fridays at 5 p.m. Pacific. That's where myself and Jeff, we just relax, talk about, life in general and kind of, what's going on in the markets. But towards the end of the day, kind of like David's market wrap up, we like to bookend, a lot of our, bookend a lot of our content, at the beginning of the day and end of the day. We got the blockchain report Monday, Wednesday, and Thursday at 11. Actually, let me make a note. I need to change that. Change blockchain report time. All right. And that is where Jeff does deep dives into new and emerging projects, and often early enough to where you can farm airdrops. So that's kind of been his. He's our subject matter expert on farming airdrops. So definitely check those out. He's actually turned me on to a couple of different projects that I've made a decent amount of money on, not just in airdrops, but just made me aware of projects before they got super popular or got a lot of mind share. So even with the markets being down, I'm really not down that far on some of those projects, especially the ones I was able to earn in DeFi. So definitely great to check out. Sovereign Soil. I'm actually going to do an episode today. I didn't do it on Saturday. I was outside doing homestead stuff. So I was actually doing the stuff that we're teaching. So I'll get on today and do one. I'm gonna talk about how I got started homesteading, and start touching on my experience with trying to find the right property, where I built my cabin and built out everything that you see here behind me. And I got 20 acres that I've done a bunch of stuff on, and I'll start sharing that experience and kind of some of the things to avoid when you're doing it, so that you don't get bit in the ass and end up not being able to have a septic system or a well or something like that. Let's see. Let's go back to here and add David. All right. So we got the market wrap. And that is where David does a quick 15-20 minutes at the end of the day, goes over the charts, what happened during the day, live trading. On Tuesdays and Thursdays, he is taking also at the end of the show, adding about 30-45 minutes, where he is taking Ellie, a member of our community that also hosts a show here. He is taking her through his one-on-one coaching program and showing what his customized. He takes an individual. It's much like DeFi University, but it's much more intense and condensed. And it is the word I'm liking to use more recently.
Bespokey.
Yes, bespoke. Actually, let me turn you up. I can barely hear you. Yes, it is his bespoke service where he customizes it to the individual. So whatever your portfolio size is, whatever your risk tolerance is, whatever it is that you're trying to accomplish, he helps you. If you want to be very hands-on, if you want to be very passive or hands-off, he tailors the experience to what it is that you're looking for. Saturday Night Fever, Jeff, that does the blockchain report, he is starting to interview a bunch of the other DJs that he knows, like DJ Superman and DJ Ponyboy, and does tutorials about if you're an aspiring DJ or want to learn how to mix music. He does all that on this show, and that is Saturday evenings at 6 p.m. The Red Pill on Thursdays, that's where we talk about our kind of hot button topics like politics, religion. This Thursday, I'm actually seeing if I can find some single ladies that are willing to come on the show and talk about their experience in the dating world. I'm seeing a lot of posts about women going to singles events, and there's no dudes there. There's hundreds, if not thousands, of single women, and no dudes are showing up.
Dude,
And
what?
Yeah.
where is this, Mike? Where are you hearing about this? Is this in Japan?
No, this is just on social media. I keep seeing posts of very attractive women. Looks like that they have a bit of a attitude problem. I'll just say, but they're complaining about how there's no men at the singles events, and you know and talking about what happened to men that buy women a drink, or try to hit on them and things like that. And I really want to dissect that because I have my personal feelings on it. But and I'm a single guy, and so I have tried the dating apps. I've tried asking people out and stuff, and so I have firsthand experience on how that whole thing goes on. And I'm no slouch. I mean, I'm a good looking dude. I'm in shape. I'm retired, own properties. I'm successful financially, retired at 40. I'm not bottom of the barrel, but I still have hurdles. I mean, I go through a lot of dates before I find somebody that I would like to go on a second or third date with. So it's David, I know you're single too, so it's something that there's no shortage of women out there, but there's a serious shortage of good women out there. I'll just leave it at that. So if you're a single lady and willing to come on the show and talk about your experience, in the dating world, I'd love to hear from you. Go, give us on X. I'll show you here in a second our X account. Send me a message there. And then of course, Gaming and Chill, and that is our gaming show that's hosted by Ellie and Jay, two members of our community. That on Wednesdays and Sundays they get on at 6 p.m. Pacific, and they play different games like Arc Raiders or Pudgy Penguins, Web3 games, things like that. And it's just a cool way to hang out and just kind of chat and check out check out new games. So with that, we have our X account. If you want to follow us there, it's at the Node Channel, all one word. And this is where you can message me. If you want to come on the show, for any of our topics, on Thursdays, this is where you do it. I might want to meet with you virtually, before you come on, just to kind of get a feel for what you're about, and if you have a quality information, or you're able to convey the information in an articulate way. Let's see. And then, of course, we got the Node.pro. And this is our official channel, homepage, where you can watch the show live. You can join the chat. David's building all this out. You have links to all the news that we talk about on the show. You have links to our no-cost DeFi University. There's no tricks or gimmicks. You can go through this whole course, very well structured. It has checks on learning, quizzes, tests, and you can.
Hey Mike, why don't you click on the courses tab, because you can actually up there in the right next to live.
Yeah, I'll do that here in a second. I kind of want to get through introducing all of this, and then the private coaching I talked about with the one-on-one bespoke service that David offers, and then the AI newsletter that we should be launching here in the next couple of days. How's that coming, David?
Well, I haven't tested the entire flow yet, but
Okay.
I'm pretty sure everything is built and everything works. I just haven't tested it with real money yet, just to buy it and make sure that all the emails come through, make sure that I get access to, the ability to change the dashboard, change the assets that you're following in your watch list. I've got to make sure that the account page that you can cancel. So I'm pretty sure that everything works. I just haven't tested it yet. I was building out all those AI agents last night, and they look pretty cool, man. Yeah.
Yeah, I saw that progress on the Slack channel. All right. And so we got, and then if you want to join our community, you can hit the community tab. This is where you can join DeFi University. And you can also join our Discord. We've got about 400, 450 people in there. Great community, great admins that help us, keep it clean. If anybody comes in there and starts to get scammy, they're gone. We don't mess around in there. We don't allow people to, post hyperlinks or anything like that. We actually do a better job than than most of the protocols and most of the Discords that I'm a member of, Aerodrome included. Their Discord is terrible. You go in there, you post any questions about anything, and you instantly get bombarded with a bunch of scam. So, our hats off to our admins and our moderators for keeping it clean in there, and keeping a healthy environment in there for for the community. Well, our store will be going live here soon. We're still working on getting some other stuff launched. You can buy David's paperback books in here that have a lot of the lessons that are in his program. So if you're one of those people who like to read an actual paper book, it's something you like to, and there's something to be said for that. Just having it to highlight and do different things with, make notes. These are great tools. If you're going to be offline, if you're going up camping or something like that, you're going to be off the grid. There's a great way to be able to dive into that information. And then of course we'll end up having our hoodies and t-shirts and hats and all that kind of stuff as well. Just trying to get some other stuff out there that's higher on the priority list. So let me go back to here and click on DeFi University. So that is courses. And you can come here to courses, and this is what David was talking about. Do you want to walk us through this, David?
Yeah, sure. So, this is all of the node courses. You can start off in the high school, and now I probably need to give it a little bit of a better intro than just the node courses. I'll do that probably today. But if you scroll down here a little bit, Mike, maybe down to the DeFi University and just pause there for a second. So these courses are in order for a reason. So, you're supposed to begin with the investor mindset stuff. That is, I think, probably the most important thing to begin with, because if you don't have any control over your mind when you start to invest, or you start to learn a new skill set like trading, your brain is going to lie to you, and it's going to tell you to do exactly the wrong thing at exactly the wrong time. And so you've really got to start off by going through the investor mindset stuff. Mike, why don't you click on the investor mindset one right there, and we can just show people what this stuff looks like. So this here it's the same format for all of the courses. There are, I want to say 15 courses right now. I'm going to be adding another 5 on options because that's how I'm trading and living right now, is just trading ETH options. But if you just click start course like you just did there, so I just want everyone to see the formatting of this. So on the right, you've got like the call outs where you can quickly go to different sections in the course material. On the left, you've got each one of the lessons. After each lesson, there's an exercise. So maybe, I don't know, Mike, if you want to click on one of the exercises there. And then for every single lesson, there is, if you go back to like lesson 1 or something like that, for every single lesson, there is a audio podcast. There is a video overview. There is, detailed and accurate written copy. So I think you just go back and then click on one of the other lessons here. I happen to like the psychology stuff, but this is fine too. So if you pause right there for a second, Mike, so everyone can see the videos. So you got the video overviews. You've got, if you scroll up just a little bit, you've got those podcasts for every single lesson. And you've got, the infographics to explain,
And you can download this as well. So like if you want to download it so that, if you're going to be on the road or something like that, you can listen to it, then, that's available.
100%. And, this is all free of charge. This is, if you want to build a skill set.
Don't use the F word.
This is, there is no charge. There,
no cost.
There is no cost. So, here's the thing. If you want to build a skill set, that's up to you. The educational material is out there, and it's right here on the node.pro. This educational material represents about 6 months of work on my part. And it's right here on the node. Definitely very valuable, I'd say.
No, absolutely. No, it's and it's there. And I'll say this. I mean, I know of multiple different channels out there that have educational courses and universities that they charge hundreds, if not thousands or tens of thousands of dollars to for people to go through. So, here we genuinely just want you to be successful. It's like, yes, we do have, certain, paid, services, but that is for people that want that bespoke experience. They want to accelerate their learning. They want a customized experience. They want to get up to speed faster, and they want access to, one-on-one time with David, to where they can go from 0 to 60 much, much faster. So, and get that, where he can go through their portfolio and, and critique their portfolio and let them know it's like, okay, this is why, this is what I would get rid of out of your portfolio, and this is why, and this is what I would, instead invest in, and why. And so
So Mike, you know what it really is? I don't necessarily give people financial advice like that because
oh,
I'm
of
not
course
a,
not. You know,
but so this is usually what the sessions look like. Now, what I'm doing with Ellie is a little bit different because it's kind of just off the cuff, and it's like, hey, I want to make sure that she has an opportunity to learn how to swap and bridge and use money markets and trade perps and provide liquidity, full range or concentrated. Use these things together. We're going to start to get into some strategies like interest rate arbitrage and stat arb. This is like really complicated stuff, but Ellie will be able to pick it up pretty quickly.
oh,
But
absolutely.
usually, when I work with private clients, people have a goal in mind already. Like they already have something that they want to achieve, be it a skill set. Maybe they want to learn how to provide concentrated liquidity without getting wrecked, or maybe they want to learn how to use a particular protocol like Pendle or Boros, or maybe they want to just build their DeFi skill set. That type of thing. People usually have a goal in mind, but yeah, I mean, another thing that I do a lot with clients is I show them how to think about these digital assets. Because Mike, we go through this stuff all the time, man. And how many times have we seen people, take a look at a piece of marketing material from some protocol or project and just get taken in by that marketing material, and then all of a sudden they've got a massive position in some random token, and it's like, dude, why exactly did you buy this thing? And they're like, well, but I saw the thing on the X and it said number go up. And
Yeah.
it's like, okay, well, let's talk about how we can analyze these protocols before you make any type of commitment. But
That's
yep.
and that's what I was getting at is, obviously we can't give financial advice, but we can explain to you, why it is that we did not invest in certain projects, and like David said, teach you, and he shows it here on the show. We show it here on the show, almost every episode, of how we do our research and how we do our deep dives into these projects to better understand the tokenomics, to better understand the company, behind the token, and what pain point they are addressing, and if they are generating revenue or fees. We really need to start thinking about these investments like real investments. When you invest in stocks, you're not going to invest stock in a company that doesn't make money. I mean, they're not going to be in business long if they're not making money, if they're not generating revenue. So, we really need to start looking at these projects and treating crypto not as a speculative asset. We need to start shifting, and you can, speculate on a small portion of your portfolio and, gamble, for the most part. But if you want to, over time, if you want to treat this like a marathon, not a sprint, you can go get, buy a lottery ticket. If you're looking to try to get rich quick, you'll have about the same, odds of, finding that 100x meme coin. But if you are in this for the long term and you want quality assets, you really need to start thinking about these assets like a traditional investment, and have a checklist. And that's what we teach here is, how to be, how to do your due diligence.
Well, here's another thing, Mike. When you're looking for a mentor, you've got to find someone who has what it is that you want.
Yep.
Like if you want a skill set, or you want to learn how to do a particular thing, or maybe someone who's achieved a level of success that you want to achieve. Like I am full time in crypto and DeFi and have been since last bear market, 2022. So, I really became full time at the start of this bull, but got
Well,
back
it's
in.
how you make your entire living too.
I live off of this. So, like I have a much longer time horizon, and this is all I do. I live, sleep, eat, and breathe digital assets. So it's
Well,
like,
but it's
yeah,
not like that was your entry into investing. I mean, you invested in traditional finance before that, and so I mean, you have a deep understanding of technical analysis and
right. Well, I
how
mean, I bought my first Bitcoin in 2012 for like $40. So that was my entry into Bitcoin.
the,
But I was buying gold and silver in 2010,
yeah.
and I made some money on that run up in 2011, and that was when I got introduced to trading. And then all of a sudden in 2012, I got introduced to options, and the moment I got introduced to options, then I fell in love almost instantly. I was like obsessed immediately. So yeah, man, it's been a long journey. I've spent a lot of time in front of screens, a lot of screen time. So, I think that having a mentor, well, that person is going to tell you what not to do. That person is going to tell you what to avoid because they've already made all the mistakes that you can possibly make, or they've seen other people make all the mistakes possible. So that's really the value is avoiding paying market tuition.
Yeah. Well, and it's I mean that's the key to a mentor is honestly it's not necessarily what they can teach you to do right. It's to help you avoid the things that they did wrong. And like you said, that hopefully they had a mentor and they taught them, and so kind of almost each generation gets better and better. And that's what I've always. You're not going to go to an accountant if you're wanting to learn blacksmithing.
No,
You're
no.
going to find you're going to find a subject matter expert. And like David said, this is what I've done through my whole life is, anything that I am aspiring to be a subject matter expert at, I seek out people that have achieved what it is that I'm trying to achieve. Because why reinvent the wheel and why navigate that minefield when you can basically attach yourself to somebody, and it can be, you can pay for that service. I've done it to where I work for free. So I provide my labor to, certain people to where, I'm like, you expose me to your network of people, you expose me to your knowledge, and I'll, do your marketing for you, or I'll do, X for you. And, it's almost like an internship. So it's that's how you find success in life is be willing to do things that other people aren't. Be willing to do the uncomfortable or painful thing of working for free, to get a valuable skill set. I mean
Yeah.
that's
Yeah, but it's not just that. It's also you got to show up
yeah.
every day and you got to do the damn thing every single day for a
I mean
long time.
that's what we're
Y-
doing here. I mean, we've
y-
been doing it for over a year and a half. It
Yeah.
costs us money to do this, but we show up multiple times a day, putting out quality content and investing money into building websites and all these different products. And we're cash flow negative, as David puts it.
I think Mike, it's going to start to pay off pretty soon here. At least we'll be able to break even pretty quick because those agents, man, those agents look amazing, man. So we've got the four, Bob, Steve, Sam, and Anna, and those four, I think they're going to need a master, like someone to just like an agent to like
Yeah,
control them. Yeah, like a CEO, kind of to control them a little bit, just to keep them in line or something like that. But
the CEO needs to be like Charles Esquire. The CEO needs to stand for something.
yeah, it's been amazing, man, to build these agents and to see that, hey, yeah, don't need to hire individual humans to
Yeah,
complete these jobs. Can instead spin up agents on Google Cloud and just have that do it for us. It's amazing, man. It's
and
amazing.
do it better.
Well, hopefully, we'll see.
Yeah, we'll see. All right, well, let's jump into the news. So, it looks like I reported on this before, but it looks like the problem has grown. People still aren't getting the message. So, I want to put this out to the community. So, there's a fake Ledger Live app on Apple's App Store, and it's reportedly drained now 9.5 million from 50 plus victims in just 1 week. So if you use Ledger, be very, very careful of the apps that you're downloading, because if you download this fake app, it's potentially going to have access to your seed phrase and be able to drain your crypto. So, this is definitely something to look out for.
So here, let's pause on that for a second, though, Mike. So, look, anyone who's using these hardware devices, they really need to understand, just like if you're going to use a perps DEX, you've got to understand the different architectures of these perps DEXs. If you're going to use a money market, you've got to understand the different architectures of the money markets. These things are not created equal. They're different. And, there are pros and cons, right? But if you're using a ledger device versus using a Trezor, or Mike, your Arculus, or I've got some of those Tangem cards. I've got another one, the Keystone. I've got a collection of these hardware wallets at this point. But it's like they're all a little bit different, and they all have pros and cons. They all have different risks and benefits. But for Ledger, everyone needs to know Ledger has a back door. Okay, they've got a back door into that software, into that device, where they can extract your seed phrase. So you gotta just understand that the 5% of the code for those Ledger devices, that is the important 5%, it's closed source. So it means you can't audit it. But if you take a look at like a Trezor, it's fully open source. So you can audit the thing. And I think that's going to become more and more important, Mike, as we see this Mythos model roll out. Because I don't know, man, they might have to put some type of limits on the thing, but it seems as though it might be able to find exploits in all sorts of pieces of software. So we'll see. We'll see.
Yeah. Those that don't know, that Mythos is the new AI that came out, and it's basically finding exploits in everything. I mean, literally everything that has been, in some stuff for decades. And this is these are the the chinks in the armor that that all of these hackers are exploiting to get into different platforms, not just in crypto, but into people's emails and just anything, bank stuff, you name it. So this is what they talk about with as AI gets smarter and smarter, and quantum becomes more and more of a reality. Then this is what is security is going to have to ramp up. So, all right. Next up, we got crypto.com. Deposits and withdrawals of Canton Network, CC, has been enabled on the crypto.com app. So it looks like that they're moving towards offering this as for sale on crypto.com.
Good.
So
good. This is great. This is great. So for anyone who doesn't know, and Mike, I actually put together a deep dive on Canton that we weren't able to get through because Shaul showed up to the interview. I was going through the deep dive, and then all of a sudden, hey, we got the guy who built it. But maybe it could be interesting just to run through all of that research that I produced at some point.
No, definitely. I definitely want to do a deep dive. I kind of want to see if Shaul can get I believe it's the current CEO. I've gone back and forth with him a couple of times on social media. It's super base dude too, and unapologetic about it. Like there's been a couple of posts where I'm just laughing my ass off because he's just trolling the shit out of people.
I love it.
Yeah, I would definitely like to get him on. Maybe we can get him and Shaw on at the same time. But I'll reach out to him after this. And actually, we're going to be talking about Amboss here in a bit, and RailsX. And I've been talking with the CEO of that project. And towards the end of this month, we're going to hold off until the end of this month, beginning of next month, because I'm not going to reveal anything. But he said that there's something really exciting that's going to be released, here towards the end of the month.
Well, right, Mike. You know why? The Bitcoin conference in Las Vegas is at the end of this month.
Yeah.
So he's probably waiting until the big
Exactly.
event. Yeah, yeah, it's
Exactly.
pretty cool.
So we're going to hold off on that interview until the again, the end of this month, beginning of next month, and he's wanting to the big reveal before he comes on. So I'm excited. I'm excited for that. But we're going to do a deep dive today. All right. So it looks like Coin Bureau is reporting the U.S. moves to make stablecoin payments tax free. So the revised bill proposes that most stablecoin transactions won't be taxed as long as their value stays nearly the same, within 1%. No gain or loss shall be recognized unless the purchase price is under 99% of its value. This replaces the earlier $200 tax-free threshold with a broader approach. Is this something you've heard about?
Dude, this is just hilarious to me.
What's up?
Like why in the world would anyone ever think it's okay for your stablecoin payments to be taxed in the first place? It's
Well,
like
that's a whole different conversation, and I agree with
I
you.
guess I don't know.
It's yeah. I mean, if you want to have the tax conversation, then it's fucking ridiculous the amount of money that the government by force freaking sucks out of us on a daily weekly, monthly, yearly basis.
I don't
But
know, Mike. All I'm saying is, if people are saying, "Yay," no taxes on stablecoin payments, well, it's like, hold on, why were they ever even proposing these taxes in the first place? That's just the way that my mind goes with this. But
well,
um,
because they're the government and they're going to find a way to tax everything. So it's a small victory, that if this becomes a reality, that we don't get taxed on this. Now we just need to get rid of property taxes and income taxes, and those that don't understand, how things work, because you and it's not your fault. They don't teach this in schools. You have to teach this to yourself. But even our current income tax, all these people that talk about the rich paying their fair share, and they don't see a problem with millionaires and billionaires being taxed more. Look back through history. Our current income tax started out with only being a tax for the super wealthy, and then
right,
as time went
right,
on, it evolved to a tax for all. So
right,
that's how the government gets you. Is
yeah.
it's always we're going to go after these people. We're gonna tax these people, or we're going to do this. But don't worry, it's for them, not you.
Exactly right. And so that's why when I see Elizabeth Warren going out there on social media
Oh
talking
shit!
about, well, Elon Musk has 35 million M&Ms and you only have one M&M. He shouldn't have 35 million M&Ms. We need to take some of his M&Ms.
All
That's
right.
literally what she said.
Yeah.
And it's just like, dude, like why in the world is it okay to steal money from people who are successful? I don't get it.
Yeah,
But
and it's like the total opposite. But hey,
yeah,
Jesse, he's the CEO of Amboss that we're going to be talking about.
awesome, dude. I can't wait.
Yeah, I tagged him in our post. I was hoping he'd stop by so he can in the chat he can tell us if we're wrong about something.
I know. I really, it's so interesting because sometimes these AI tools, they just make stuff up,
They
like they'll completely hallucinate. So it'll be good to have him in the chat to take a look at some of the content that I'm producing right now.
absolutely, and of course, like I said, we're arranging for him to be on the show, towards the end of this month, beginning of next month, after they get done with the Bitcoin conference and announce their big big reveal.
Hey, Mike, let me refill my coffee. Give me 10 seconds, man.
No worries.
Be
I'll talk
right
about
back.
Kent. I'll talk about Canton for a minute. All right. So HSBC has completed a pilot of tokenized deposits on Canton. So the simulation included issuance, transfer, and atomic settlement of deposits against digital assets with interoperability across settlement rails, extending coordinated settlement across cash and asset legs. So a quick breakdown of this. HSBC is a massive bank. And Canton Network, if you don't know, I mean, I don't know how you wouldn't, but Canton Network is quickly becoming everything that Ripple was trying to be. So as far as cross-border payments, being a liquidity layer for banks and institutions and governments, they are purpose built And natively, they are building out, privacy layers, compliance, the AML, KYC, all of those different aspects that, regulatory bodies, governments, banks, institutions want to see. They have built all that in natively to their network. And it allows siloed networks, such as banks, to connect and have interoperability for liquidity and things like that, and customize the privacy to where only certain entities are able to see the details of those transactions based off what they need to see. So
Right.
it's not fully transparent. And yes, this goes across kind of the crypto punk ethos, but this is how the technology is evolving. If banks, institutions, and governments are going to use this, it's going to have to follow their rules. Is there still a place for DeFi, like pure DeFi? Absolutely, and I fully support it. But ignoring these technologies that are actually being adopted, that are actually being built on, that are actually generating fees and revenue, you are doing yourself a disservice. So, not saying run out and buy Canton or anything else, but you need to understand how this ecosystem, how crypto is evolving and being in the adoption curve,
Yeah.
because that is going to tell you where your attention needs to go. And I've already rotated out of some assets I was previously bullish on, because I'm seeing how this is evolving, and a lot of those projects are dying.
Yeah.
So
Mike, I see two parallel financial systems evolving here right in
yes,
front of our eyes in real time. I see, what's going on with some institutional adoption of digital rails in the form of Canton and Connexus, these large banks migrating some of their repo book onto digital rails, starting with JP Morgan Chase. They're putting over the next 24 months like 15% of their repo book on digital rails. It's going to be
yep,
Canton and Connexus running that. So okay, that's great. They're upgrading their backend. It's almost like a mullet. It's going to remain the same Web 2 infrastructure that everyone's familiar with in the front, and then it's going to be the Web 3, digital rails in the back. They call it mullet banking, but that's the U.S. dollar denominated side of things. That's the traditional rails. Even though
yes,
these traditional rails are getting a digital upgrade, it's still US Treasury system stuff. But then you got the parallel financial system. That's Bitcoin. And Bitcoin is true freedom and sovereignty and liberty. That's what
yes,
Bitcoin represents. And so
yes.
for, a guy like Jesse building on top of Bitcoin, really building on top of the layer two, it looks like Lightning, and we're going to learn about that today. To me, that's what true DeFi needs to be. It needs to be denominated in Satoshis. And so
Yes.
that's what I'm looking forward to. And I can't wait to get into the research.
I'm a convert. I definitely believed in Bitcoin, but I was almost exclusively altcoins until me and you started talking.
The shitters.
Well,
Love you some shitters.
well, I'm a higher risk. My portfolio was higher risk. I was looking for a 10x. I was looking to
Sure.
10x my portfolio, and then once I had, my plan is once I 10x my portfolio, I'd have a couple hundred grand, and then I would rotate, and start buying and using DeFi to earn yield, and stack my bag of Bitcoin and things like that. So my whole thesis has changed. I'm definitely stacking Bitcoin now, and kind of reshuffling my portfolio. But let's jump into the news, because we got about 20 minutes before I want to do our deep dive into Amboss. Um, so it looks like Safe Haven Retreat, the U.S. dollar, the Dixie, has dropped to a 6-week low near 98, and Treasury yields are softening. The 10-year
Mm.
is at 4.29%. What are you seeing on that, David?
Oh yeah, here. Let me go ahead and share my screen here. Let's take a look at some charts here. Um, all right, so I just always start off with ETH because this is how I make my living trading ETH. But let's go ahead, or at least right now, this is how I'm making my living. During the bull, it was a hell of a lot easier. So, Mike, what you were just talking about, with the dollar, well, I'll get to that in a second. But the 10x on the portfolio, you can do
Yeah,
that on Bitcoin, bro. You don't
and
necessarily need.
site, yes, but again,
This
it was
is
my first market. I was new to crypto,
I hear
and
you, dude. It's all
yeah,
good.
yeah,
It's all good. So here's the Dixie. Here's DXY. So one thing that we've got to take a look at is number one, we've got to zoom out. We've got to zoom out to a weekly. And on the weekly, I want to just bring everyone's attention here. I'm going to go ahead and move this right here. All right. So you see this long-term trend line support? This
mhm,
is significant trend line support. It was broken briefly just a
it
couple of months
was
ago.
significant.
It was. And so, but here's the thing, when a long term level of support gets broken like this and then recovers, you get back up above it. The fact that it was broken, in my opinion anyway, and I'm sure that other technical analysts might have a different opinion than me, it makes it seem as though we're likely to head back down below this trend line support. That's the way things look now. So, DXY holding at 98 support right now. This is long-term trend line support as I zoom in. This is a very significant level of support. Now, what could push the dollar in one direction or the other? Well, if we're looking at the dollar, we've got to be thinking about rates and we've got to be thinking about, treasuries. So let's take a look at yields on the 10-year treasury note. So this is a weekly, and what we're looking at here is the yield on the 10-year. So the yield on the 10-year is sitting at 4.270% right now. So if yields push higher, that is usually positive for the dollar. If yields push lower, that is usually bearish for the dollar. So in the face of everything that's happening in the Middle East and Iran, it looks to me as though that blockade is likely to be successful because, hey, guess what? The Iranians no longer have any military assets to threaten shipping with. So all they have is bluster. And with real US Navy assets in the Strait of Hormuz facilitating that blockade and making that waterway safe to travel, I think that the futures curve for crude oil is telling us all we need to know. And I'm not showing the curve here. I'm just showing the WTI contract on a weekly. In fact, we could just zoom in here to a daily. But what I think is going to happen here is we're just going to see WTI move back down to where the futures curve is telling us it will go over the next couple of months, which is right around $75. So that's what I expect. And if that was just the level that the futures curve is implying. But if we just throw down like a little bit of trend line support here. So notice if I connect these three levels, let me just show everyone what I'm doing here so we can talk through this together. So I use this wick as my anchor. That's the low. And then I did my best to connect it to the next higher low and the next higher low. And then notice we got a breakdown today. So we're getting a breakdown below trend line support. We've got the 200-day moving average well below at 67. And we've got a big gap here. So we could see crude just, move a little bit lower. I think that we're going to see crude move back down into the 70s and a de-escalation in that region simply because, the other side has no ability to threaten any of its neighbors or shipping any longer. So that's a big net positive for the world. It'll probably take a couple more weeks to play out. But markets are forward looking. And so they're going to start to price that in. And if we're talking about pricing that in, man, look at this. This is the S&P, okay? don't you wish Bitcoin would do something like this?
It
Um,
will.
I really wish that Bitcoin would rip like this. But so this V-shaped reversal here, we are within a stone's throw of fresh all-time highs on the S&P. The Nasdaq also just ripping on NDX. But we got to take a look under the hood. So volatility has mean reverted all the way back down to its 200-day moving average. That means a reset of volatility expectations. So we could see, a pullback from these, just about at fresh all-time highs. If we take a look down the list, some of the most important items, Oracle. This one has actually been, quite positively correlated with Bitcoin because this is a big software player. And
Yeah.
IGV, that software index, has been correlated with BTC for about the last year or so. So when I see Oracle putting in a big bounce, it makes me think, okay, well, Bitcoin likely bounce. And that's what we got out of Bitcoin. But we got to take a look at IGV also, because this one is sitting at like make or break territory here. The more times you get a test of a level of support or resistance, the more likely it becomes that it breaks. And so once you get past like the third test, then on the fourth or the fifth,
Think of it as a metal ball bearing bouncing against a plate of glass. Each time it
right,
hits, it's weakening it.
exactly. That's a great analogy. So we got the first test here, the second, the third, the fourth, the fifth, and then it broke. And now we're back up above it, but barely, barely, just clinging to this level of horizontal support. And you've got to think, all of those private credit funds that have been gating investors, which, many of them gave a lot of money to software companies, which, it seems as though with this AI disruption of software, those companies may not be able to repay those loans and investors are freaking out. Well, software got slaughtered and there could be even more downside ahead. So I'm watching IGV closely because I think that the correlation with Bitcoin will continue. So if that correlation continues, and if it is true that BTC is truly in a bear market, which I have no doubt of that, simply because there is a cycle. For whatever reason, Bitcoin has a cycle. And that cycle tells us that we should be about to roll over and test this 200-week moving average, potentially move down to the lows from August 2024, around 49K. So this looks to me like a beautiful bear market rally, maybe similar to this bear market rally in the beginning of April in 2022. So my expectation here is that Bitcoin actually rolls over and that this 200-week moving average fails on the downside, simply because that's what the cycle tells me to expect. And the cycle tells me, hey, we should see a Bitcoin trough put in by October 5th. And then we should see the next all-time high put in by, I think it's September 4th of 2029. So I'm thinking about this over the next 3 years, 3.5 years. I've got a little bit of a longer horizon, and I'm just waiting to be able to buy some Bitcoin at or below 49K. That is my bear market strategy is number one, be patient. Number two, be willing to step in and buy some red. And number three, wait, do nothing. So that's the strategy. Wait, buy, and then do nothing for a couple of years. So that's the strategy on BTC right now.
That's
And
a disciplined strategy.
yeah, it is. It's not easy, man. That is not easy at all.
No,
Most people want to jump in. They, see a green candle and think, "Oh my goodness,
well,
it's going to pump to the moon."
that's where the psychology comes in. That's why it's so important to build your foundation. The psychology of investing before you invest a single dollar, because without
100%.
it, the liquidity is just going to get sucked out of you. They're going to use your emotions, and they're going to, when everything pumps, they're going to have you buying, and then they're going to freaking dump and take all your money. And when it dumps, you're going to get emotional and you're going to sell everything. So you're going to be buying high and selling low, which is the opposite of what you want to do. So,
Yeah, you don't want to do that.
no, but that's what
Yeah,
emotion will get you doing.
it does.
So you gotta become dead inside. That's the moral of this story. Is you gotta become dead inside.
Yeah, or what you can do is you can go through the no cost education at the
Yeah.
node.pro courses and, build yourself a DeFi investor skill set. And when it
Mhm.
comes to the mindset piece, you can easily do that just by going through the course material. And if you don't like reading, well, there are pretty images. You can look at the pictures.
Yeah.
If you, or
Or
you can watch the
video,
video content.
or
Yeah.
you can download the
Or
podcast, and it will read it to you.
Yeah, there you go. There you go.
All right, so next up, we got about 10 minutes before we get into Amboss. So oil and I'm done talking about oil. TradFi reaction. The Nasdaq 100 is up 2.5% today, signaling that institutional capital is rotating back into growth assets. Break that down for us.
Sure. So, this was a big, big bounce. And basically, whenever you see volatility spike, usually, and this is just a chart of volatility futures here on a weekly. Let me zoom in here to a daily. So, whenever you see volatility spike like this, get up to, high 20s, low 30s, it might even be better to take a look at VIX. So this is just the calculation. VX, the futures, is the tradable product. You can trade options on VIX, but you can't trade this directly. It's actually priced based on the futures, which is kind of like a tail wags the dog situation. Kind of
Yeah.
interesting. But whenever you see volatility expand like this, you've got to understand that volatility is a mean reverting asset class. So what that means is whenever vol expands and equities sell off a little bit, if that bearish positioning becomes too extreme, then it sets the market up for a big reversal in the opposite direction. Now, what's been so interesting, Mike, about this reversal, and if we just want to take a look at the NASDAQ cash index, what's been so interesting about this reversal is we haven't gotten the elevator down and the escalator up. It's been the reverse. It's been the escalator down and the elevator up, like crashing up and slowly melting down. Now, usually you don't see that in equity land, but that's what we're seeing now. And I think it's just a result of positioning in these large cap tech items become very light by institutions. And that light positioning led to a regrossing. So, Google, big rip out of Google from the lows at 270 all the way up to 330 today. Nvidia, basically Nvidia has been stuck in this channel for a couple of months now. It's basically since last summer, Nvidia has been stuck in this channel, back up above its 200-day moving average, big bounce right at support. You see that horizontal? This was horizontal support and it held. So Nvidia, big bounce. Microsoft, even Microsoft after the breakdown, there was a big breakdown after Microsoft reported here, this gap down and go. And, now we've got Microsoft attempting to retest what is now resistance, the underside of resistance here. Still, this is a big move off of the lows here for Microsoft. Apple never really got hurt during the correction because Apple doesn't have, the billions and billions of dollars of AI data center capex spend that the other big Mag 7 items pretty much all do. So Apple wasn't punished after reporting earnings like the others were. So it's bouncing off. It held actually its 200-day moving average. Amazon, big move out of Amazon, holding support also. So notice this was the anchor point back in January 23. 1 test, 2 tests, 3 test, 4 test, and big bounce. Huge reversal out of Amazon there. So this is what's fueling this enormous rally. Meta, big breakdown below trendline support and then regain trendline support. But notice where we've got resistance now, that 200-day moving average coming in just above where Meta is currently trading at 663. So we've got that 200-day moving average acting as resistance above. And then Oracle, big software player, it was up like 12% yesterday, continuation today. But so far, and this is important, so far, this is just a lower high. So even with the structure here is still bearish. So we've got a high, a lower high, and so far just a lower high. We've also got a low, a lower low, and a slightly lower low. But you got this really big level of trend line support here. So basically the structure here remains bearish. And so if I continue to believe that Bitcoin's in a bear market and that it's positively correlated with software, and we get a big bounce out of a levered software player that seems to be putting in a lower high, it just makes me think that, hey, maybe this bounce out of Bitcoin, maybe it won't be able to test the upper channel, just like this last bear flag.
And didn't Oracle just lay off like 30,000 people or something like that because they're moving towards AI doing all those jobs?
Yeah, I think all of those companies are going to do that because, I mean, Mike, you see what I've been able to build,
Well,
like,
that's what I'm getting at. Is I mean, that's just going to increase profitability,
yeah,
and potentially could send the stock higher.
isn't it so funny? Like, lay off all the people who could buy your product and then the stock of your company goes up. But at some point, is there going to be anyone left to buy your stuff? Like, I don't
Yeah,
know.
if nobody has jobs, how are they going to buy stuff?
I have no idea, man. Maybe, helicopter money from the government. We'll see.
Right. Yeah, and there's been a lot of talk about that. Universal basic income, the
Ah,
UBI.
man.
You
Well,
know,
Bitcoin fixes this.
well, and that's why I'm here. That's why I'm invested in crypto. Is I mean, I'm retired military, and I have my military pension and stuff like that. But I'm and then here in what 10 years or so, I qualify for Social Security, but I don't think that's going to be around. And honestly, I don't know how long my military pension, the way the government,
Oh,
the way the government is carrying on. So I'm looking to augment my income with investing, and that's why I'm investing in Bitcoin and learning about DeFi and learning how to earn yield and things like that, and building a portfolio because it's the passage or the way to sovereignty. And on that note, let's start shifting over to Bitcoin and Amboss. So
righty.
First off, it looks like Ethereum has been pumping today, out performing Bitcoin, but Bitcoin price action. Bitcoin has climbed back above 74K, testing last month's highs. Analysts suggest a break here could lead to a run towards 87K to 90K. Are you seeing that? Because I mean, I know we've been talking about bear flags and potentially things going lower. I mean, are you seeing the potential for it to go back up to 87 or 90?
Sure. I mean, look, I don't have a crystal ball, but what I do know is that this is a flag. This is definitely a bear flag, and this is the second bear flag. So here's bear flag number one. Here's bear flag number two. So these are bearish price action patterns, and the expectation is that we should see this confirmed to the downside. That is the expectation. Given that we are solidly in a Bitcoin bear, it is the midterm year, and we put in the all-time high on October 6th, so we should have just about 12 months of bear market from October 6th, and that's why I gave myself a target of a trough for BTC by October 5th of this year. Now, usually Bitcoin bear markets experience a drawdown of around 70% or so. So if we see a 70% drawdown this bear, well, that brings Bitcoin down into the 30s, the 30K region. But there is an argument to be made that we won't see a 70% drawdown. And the argument, I think, is simply that we didn't get the true parabola and euphoria on the upside this cycle.
Yeah.
So we may not get such a deep bear. But there's a part of me that thinks, anytime I hear someone say, oh, well, this time it's going to be different, I don't think so. So, I think, look, I don't have a crystal ball here. Could we see Bitcoin rally up to its 200-day moving average up here at 88,000? Sure, absolutely we could. But I think it would still be a sell. I think it would still be a sell, even if it rallies up there. So we'll see.
I think another data point to look at is with the ETFs and you got strategy buying and just there are things that have changed in the markets with institutional adoption and the buying that potentially could shore up and not get that 70% drawdown. Maybe we just go into the 50s, and stop there. And again, we don't have a crystal ball, but I'm looking at kind of some of the data points I got here, and it looks like global crypto funds saw 1.1 billion in inflows last week, the highest since mid-January, with 872 million alone going to Bitcoin and 197 million going to ETH. So, a lot of that, and then you got strategy that seems like every other day they're scooping up hundreds of millions, if not billions of dollars of Bitcoin.
Yeah, so what I've got here coming from Farside, and this is just going to track the ETF, those ETF products, the BTC ETFs. So yesterday we got some outflows. We got some pretty significant outflows yesterday. To the tune of nearly $300 million. So yeah, I'm just thinking to myself that this tends to be a lagging indicator. I haven't seen this really be a leading indicator, but it's always a net positive when there's more adoption of the technology, more users, more adoption. That's positive. But Bitcoin is not digital gold. And so people just buying and holding Bitcoin, waiting for price appreciation. That's why I'm so interested to learn more about Amboss and RailsX, because Bitcoin needs a true use case outside of just buy and hold so number go up. Like there needs to be real DeFi on Bitcoin and or on Lightning, but somehow that transaction volume, because all the Lightning transactions, those are all off chain. That transaction volume somehow needs to make its way on chain, I think, because I just think out a couple of cycles, like think out, over the next 2 cycles, what happens when miner rewards are cut in half by, an additional 2 times? I think it really needs, what Chad's saying in the chat. Bitcoin needs an ecosystem to really move it beyond the store of value.
That's why I made the thumbnail like I did, and because I think that Amboss understands that, and that's what they're trying to do is move it from a store of value and help it evolve into a medium of exchange.
Yep, and that's what needs to happen. That's what needs to happen because, Mike, I remember just how much you really enjoyed getting those Satoshis, right?
It seems so long ago, I barely remember, what it's like, how it works. It's like I really could use a refresher, and and how all of that, works.
I bet. I bet, man.
So let me read a little bit of this, and let's jump into Amboss. So DeFi and hold on, gotta sneeze.
Bless you. Uh-oh.
DeFi and Bitcoin Layer 2, the rise of RailsX. So the world of Bitcoin Layer 2s and Lightning, the momentum is shifting towards self-custodial trading. RailsX launch. Amboss launch of RailsX is trending as the first Lightning-native DEX. It effectively opening the 9.5 trillion Forex market to Bitcoin by allowing peer-to-peer swaps of Bitcoin and stablecoins like USDT issued as Taproot assets without giving up custody. So that's a big part that I like about this in my initial look is a lot of this, if not all of it's non-custodial. Lightning ecosystem. Industry leaders like Tether and Lightning Labs are actively pushing for USDT on Bitcoin via Taproot Assets, which is a primary driver for the functionality RailsX provides. So with that, David, what do you got for us on Amboss and RailsX?
Sure. So the first thing that I want to share here, Mike, is, about 10 weeks ago, I moved out here to South Florida. And upon moving out here, I met in person a big Bitcoin community here. And I had only used Lightning a couple of times, but I met someone who told me, hey, you've got to check out Lightning in Nostr. And so I did. And because of Cursor, I built a private node stack and a private custodial wallet. The idea was, build the stack and the wallet, the node and the client. The client is actually the wallet. And then I could build a DEX on top of it. I was thinking of building like an AMM style DEX on top of it and using that to essentially like mint, Taproot assets against BTC. That was my idea. And I was able to actually build it out. And so I put together, in the process of learning about it, I put together all of this educational material. And this is not quite done, but I think it's probably a really good idea if anyone wants to just read the copy. All of the copy is written and ready to rock and roll. None of the images are in here, and the videos and podcasts are not in here yet. But it's probably a good idea for anyone who isn't super familiar with Lightning and Bitcoin layer twos, because there are a handful of them now. It's not just Lightning. And building on Bitcoin is much, much more complicated than it is to build on EVM chains, and write smart contracts and wire them together. Building on Bitcoin is, I think, a much better experience. So what I want to do here, Mike, is I actually put together, and yeah, so this is the Amboss page. I've got all of this education that I want to run through first. So this is, I think, going to be really important. The first thing that I always like to do when I'm learning about a new protocol is I'll begin by putting together a deep research report, or sometimes, most of the time, multiple deep research reports. And then I'll throw that stuff into Notebook LM, create video content for myself so I can learn about the protocol, create a slide deck, create an infographic, and then I'll do that multiple times for every different facet of the protocol, just so that I can learn, hey, how does this thing work? That's what I did for Lightning. And I mean, dude, that's why I'm so excited about Amboss, because it looks really interesting. So I want to play this piece of video content, and then I want to go through that slide deck. And if we've still got the Amboss guys in the chat, hopefully they can tell us if there are any hallucinations in this video content. I think that'll be really interesting.
Can't hear it.
Got it. Okay. For some reason, when I share my screen, and then the first time, I always have share tab audio on, but for some reason, it doesn't usually work the first time. So here we go. Let's try this one more time.
Traditional crypto trading typically requires users to deposit funds into centralized exchanges, surrendering their private keys and accepting the risk of platform insolvency. Lightning-native finance provides a different path, where trading occurs directly through payment channels you control. The Amboss ecosystem organizes these services into...
Okay, so I got to pause it right there. Payment channels you control. So this is challenging, because in order for you to have custody of your assets, or at least one of the things that I think about it, if I'm using one of these Lightning wallets, is if you've got custody, you probably have to maintain your own liquidity channels. So inbound and outbound liquidity. And it's not always all that simple to set this up properly. And many of these wallets don't really work all that well, and they're not user-friendly. Okay, so many of them anyway. Now, the custodial stuff is like stupid easy and very user-friendly, but it's custodial. So think Wallet of Satoshi. That's one of the most successful custodial Lightning wallets. So, very, very easy to use, one-click setup. But the non-custodial stuff is much more difficult to use. So that's why I want to learn more about Amboss, and I want to start using the product.
You control. The Amboss ecosystem organizes these services into a vertical stack. It begins with network intelligence at the base, followed by the Magma liquidity marketplace, the Rails yield engine, and finally the Rails X exchange for peer-to-peer trading.
Okay, so I wish that this piece of video content had given, these different pieces of the stack more traditional, like pieces of language to describe them, rather than Amboss analytics, Magma liquidity, Rails yield, and the exchange. Because what this looks to me is like you've got to have edge nodes that you're running, And then on top of that, maybe you've got a client, and that client could be a wallet. And then on top of that, you can build, like a money market. I'm assuming that's what Rails yield means. But I think that the way that they're able to generate yield here, I think, is it could be relay fees. There are a couple of other ways that you can generate yield natively paid in Bitcoin on Lightning, which is really cool. And then you got the exchange. So I want to see what type of exchange this is.
This tutorial demonstrates how to move fiat currency onto the Lightning Network and exchange it for a digital dollar stablecoin while maintaining custody of your assets throughout the entire process. To follow these steps, you will need a Lightning wallet that supports the Taproot Assets protocol. This technical standard is necessary for the wallet to recognize and hold multi-asset tokens like stablecoins. By utilizing this specific sequence of tools, the user avoids the need for a third-party intermediary to hold their funds during the trade. Standard Lightning payments generally require the receiver to be online at the moment of the transaction to sign for the incoming funds. If the wallet app is closed, the payment cannot settle. To remove this requirement, navigate to your wallet settings and enable Ghost.
Okay, so the way that I set up this piece of video content was as a simple explainer. What I should have done is let it just run by itself, so that it would have described Amboss to us. What it's doing here is it took the Amboss source context and it created like a simple onboarding into Lightning explainer.
Addresses.
Real quick.
Network to hold.
So Jesse says that yield is a fee capture. And then he also says it's liquidity leasing, new connections, and routing income from forwarding payments.
Got it. Okay. Perfect.
The payment in a conditional state until your application is open to claim it. Next, use a fiat portal like Magnolia or Bringin to transfer capital from a bank account. Select your local currency and send it to your Lightning wallet to acquire your initial balance. This step converts your bank deposit into Bitcoin. The transaction settles nearly instantly, and as you can clearly see on the digital receipt, the processing costs are significantly lower than traditional wire transfers. Establishing this link between a traditional bank account and a non-custodial wallet creates a high-speed pipeline for moving capital onto the network without relying on the SWIFT system. Lightning channels have fixed capacity. If your side of the channel is completely full of Bitcoin, there is no room to receive an incoming stablecoin payment.
Right, so this is the inbound, outbound liquidity challenge, but also the Taproot assets. So not all nodes are going to be able to see those Taproot assets. So you're kind of stuck operating within your own little ecosystem, which might not be a problem if that ecosystem grows exponentially, right? But if not all nodes can see the Taproot USDT or whatever the Taproot dollar is, or literally it could be anything. It doesn't have to be dollars. It could be yen. It could be pesos. It could be crude oil. It could be natural gas. You can literally tokenize anything. So the only challenge is, from my understanding of this, and I would love to be corrected in the chat if possible, but my understanding is that these Taproot assets can only be seen by nodes that are running a particular software set. So that's my understanding here.
You must first create space on your end of the channel.
Or maybe not even nodes. It's the node plus the client. I think it's both. The way that I built it.
It's all about the node. It's all about
it's the node. So it's really, so my understanding when I built this thing out, and I built it out only like 4 weeks ago. Like I've still got, like I could hop into that repo and I could probably get grant money to finish building it. But yeah, so you've got to have, I think, the node and the client together on the same hardware. And I just ran it in Google Cloud because it's easy for me to dial in and spin it up. But you got your edge node that's running your privacy stack. You got your client, and then you can build on top of that. So what I wanted to build on top of that was a perps DEX, and so that's what I did. I built a perps DEX on top of my own private edge node client stack.
Magma Marketplace solves this by allowing you to purchase inbound liquidity. A node operator
liquidity. So that's what he was talking about. That's what the CEO Jesse was talking about is, you can purchase or lease this liquidity. So that's part of the reason why it can be kind of challenging. Okay, what's he saying? Rails liquidity provider product interfaces between Bitcoin denominated and Taproot asset denominations. Okay, so our Rails liquidity provider, Mike, I want to see that one more time. Our Rails liquidity provider product interfaces, the product interfaces between Bitcoin denominated and Taproot asset denominations. So Rails liquidity provider product. Wow. So
Okay, so it looks like that Magma marketplace will enable leasing in Taproot assets.
that's really cool, man. That's really cool. So
Maybe you can break that down for us really quick, because I know that, I mean, I have a general understanding of what that means, but it's a bit technical. Like what makes that a good thing?
so here's the way that I'm thinking about this, and I want to put it in terms that someone who's familiar with Ethereum virtual machine products would understand, right? So if Jesse here is talking about the liquidity provider product, that makes me think a pool of two assets. You've got Bitcoin and you've got the Taproot asset.
Mm.
And so the Rails LP product interfaces between these Bitcoin denominated and Taproot denominated assets.
Most likely a stable coin.
A stable coin, it doesn't have to be a dollar denominated stable coin.
No. I mean, but it's just,
and
I know a lot of the, if I remember right, the Taproot assets, a lot of what it was talking about was stable
yeah,
coins.
look at that. He says I'm right.
Yeah.
This is fun, man. This is so much fun. But yeah, so I mean, this looks like a really interesting product. I want to use it.
Creates a new channel with the balance already on their side, effectively giving you the empty space required to receive funds. Log into Magma, select a node operator with high uptime, and purchase a channel lease. Once confirmed, a new inbound channel appears in your node's dashboard, ready to receive a swap. Note that you should lease slightly more capacity than the amount you plan to swap. This extra margin covers the micro fees required to route the transaction through the network. Without this inbound pipeline, the network would have no path to deliver your swapped assets. Magma provides the underlying infrastructure that makes these larger, decentralized trades possible. Open the RailsX interface and select the BTC to USDT pair.
Stable.
Enter the amount of Bitcoin you wish to convert and click the swap button. RailsX executes this trade using a circular self-payment. You are routing your own funds out through a specialized market maker node, where they are converted and immediately sent back to your wallet in a single trip. This conversion uses the Taproot Assets protocol and is secured by a hashed time lock contract.
Okay. So these are not private. So HTLCs are not private. They can be doxed, but PTLCs are private. So it really just comes down to what type of what type of code, what type of node architecture do you want to run? And maybe Jesse in the chat can correct me, but I'm pretty sure that HTLCs are not private, but the PTLCs are, because they use like these magic envelopes, which is, look, man, the terminology here is super cool.
HTLC. This is an all or nothing mechanism. The transaction only settles if the entire loop is successfully completed.
Right.
Watch the dashboard as the status changes from routing to settled. Your wallet will now reflect a new balance of Taproot USDT.
Okay, so here's the thing for me. I'm trying to understand. Okay, so he's saying the end result is that our liquidity providers enable stablecoin payments for end users, while LPs capture AMM fees and routing fees. Lightning becomes a DEX with a public Bitcoin core. Dude, I love it. I love it. The only thing that could make it even better is if there was privacy built into it.
Yeah, like a privacy.
That's the only thing that comes to mind here. But here's another thing that comes to mind. So if you're holding USDT, okay, a Taproot USDT asset, I think that you're kind of stuck in this ecosystem, because I don't. Oh, so he's saying HTLCs are very private and allow the payments to settle. They do settle atomically, um, but HTLCs are onion routed. Right, right. Um, I thought the point time lock contracts, the PTLCs, were private, and the HTLCs, although onion routed, were not quite as private as the PTLCs. Um, but I could, of course, be wrong there. The only thing I was thinking about when I built this was how could it fail? Like that's always what I'm thinking about. Like what could go wrong? And
You're talking about with the
I,
transaction, or
no, I'm talking about just with the protocol itself,
okay.
because like number one, it's got to be a business because you've got to pay to keep the node architecture running. Okay, so that's number one. It's got to
What we always talk about. It needs to generate revenue.
right. It's got to be a successful business. And number two, what happens if some of your nodes go down, or worse, your client state gets lost? If your nodes go down and your client state gets lost, even if my understanding here is that even if users custody their own keys, meaning they do have custody of their assets, it's almost like they've got custody of their assets, but just within this ecosystem. And so if God forbid something horrible were to happen and the nodes and the client state go down and there were not a backup of the client state, then I believe assets would be lost. So that was just something that was going through my mind there. And so I thought to myself, well, how do you back up the client state to make sure that if it goes down, it can be immediately booted right back up? And what's the name of that protocol on Lightning? It's decentralized storage. I can't remember the name of it. It's like a flower or something.
I'll look.
Sure.
Because this trade is executed as a single, indivisible payment loop, it removes the security vulnerabilities found in cross-chain bridges, ensuring you never lose possession of one asset without receiving the other. By following this process, you've moved fiat from a bank into a digital dollar stablecoin, while maintaining full control of your private keys. This trade relied on Amboss data, Magma's liquidity market, and Rails' Axe exchange mechanics to function as a unified system.
Right. So you see this. This is
Well,
the node, and yeah, go ahead.
Real quick, I typed in decentralized storage on Bitcoin mainnet. It actually came up with Amboss and RailsX, the cloud layer. So it says
Right.
beyond static storage, while ordinals are for storing data, RailsX and Amboss use Bitcoin's layer 2 Lightning to make that data actionable. Taproot Assets.
Yeah, here, let me find it real quick. I just can't remember the name of it. What is the Lightning BTC Layer 2 data storage protocol? Can't remember the name of the thing, but it would have served essentially as a backup. So let's see.
Oh, he says, see, I'm glad he's here. The Amboss cloud thing is a hallucination. See, I'm glad he's in the chat.
I love it. I love it. Yeah, I'm trying to find the name of that. It's like a Lightning storage protocol for data, completely decentralized. Don't recall the name of it.
Well, it says Lightning-native protocol you're looking for is called L402, formerly known as LSAT. While standard mainnet storage like ordinals is for permanent static data, L402 is the protocol that enables decentralized functional storage and access on layer 2.
I don't think so. So tell me about the decentralized storage options on top of Bitcoin or Lightning. Once I see the name of it, man, it'll ring a bell instantly. I just don't remember it off the top of my head. Let's see here. It's got a name like it kind of reminds me of like a flower or something, I want to say. And Gemini's having a hard time digging it up. But so here's the thing. You see how you got this stack that Amboss has built? It's a combination of your node and your client, and then everything that you build on top of that. So this is true DeFi on Bitcoin. And that is amazing. And you know how much work it is to build this thing out and make it work? Like, these guys are based, bro. And let's finish up. We've only got like 30 seconds left here.
Now that your stablecoins are in your wallet, they can be used for more than just storage. In our next video, we'll explore Rails, allowing you to deploy these balances to provide network liquidity and earn automated yield from routing fees. Moving from simple storage to active participation allows you to generate fees from the network activity your liquidity supports.
Liquidity.
Liquidity.
Okay, let's check this out. So we've got the Amboss stack in the slide deck. I want to run through the slide deck real quick. Okay, so maturation into a full stack financial layer. So Bitcoin, I just don't see it as digital gold, but some do. That's fine.
Say phase one is a store of value.
Store of value, sure. Yeah. And Jesse's saying so much work, and it's like, yeah, dude, I hear you, bro. No doubt. So, you know, phase one, store of value, base layer security, slow settlement. Okay. Phase two, peer-to-peer payments, medium of exchange. Okay, you got the Lightning network, high throughput, low cost microtransactions. Awesome. Yeah. Phase three, Lightning-native DeFi. Dude, I love this. You know, this is true sovereignty right here. You can't censor a private key. And so if you can build DeFi on top of Lightning, that is truly self-sovereign DeFi and denominated in Satoshis, man. Love it. So here's the key insight. The store of value narrative is being rapidly augmented by a medium of exchange reality. Bitcoin serves as the bedrock for this high-frequency global economy. So really what you can do if you build cool, I guess you could call them dApps. They're, you know, I would call them more like apps. These are you know, Bitcoin apps. They're DeFi apps on Bitcoin. You can start to use Bitcoin as your treasury asset because everything is denominated in Satoshis. So if Bitcoin is your treasury asset, and so he's saying, David, are you talking about Bolt? Oh, I see the comment in the chat there from Chad talking about Bolt. So, you know, if memory serves, Bolt is for like using cards, like on Lightning. So like one of the products that I built on top of that private wallet into the wallet is the ability to spend Satoshis in person on a credit card. And I used Bolt to do that. But I wasn't talking about Bolt earlier. Maybe I misspoke. I could have. But yeah, so I want to use Bitcoin as the treasury asset. That's what I want. So here's the Amboss ecosystem. And I want to see if there's any hallucinations here since we've got the team guys in the chat. You know, maybe they can tell us if this is accurate or not. But, you know, the layer one, they call it intelligence with Amboss analytics. Network graph, data insights, okay. Layer two, liquidity, they call that magma. Peer-to-peer capacity marketplace, liquidity premiums, and leasing fees. Great, awesome. Layer three is the yield with Rails. That's the automatic. So they call it an automated liquidity provision. So this is just, you know, like a quasi AMM. So when I built it out, what I did is I just took Uniswap v2 and basically like forked it onto Lightning, if that makes any sense. And then they've got the exchange here. So RailsX, the Lightning-native DEX. Dude, I love this. A Lightning-native DEX is so awesome. High frequency trading and arbitrage gains. I'm going to start trading on this thing. All right. Layers 1 and 2, intelligence and liquidity. Okay, so let's check this out. Oh, you see what Chad's saying in the chat there, Mike? He says from GitHub, the Lightning Network's Bolt 1, the base messaging specification, includes an optional feature called Option Provide Storage. Nodes that advertise this feature can offer to store small amounts of arbitrary data for their peers No, that's not what I was referring to actually. The storage protocol was for like any type of content. So think video, images, whatever. I just don't remember the name of it off the top of my head here. So bringing it back on over to the slide deck. So you got the intelligence with Amboss Analytics. It says provides real-time visibility into channel health and liquidity distributions, piercing the obscurity of Lightning's onion routing protocol. Okay, I like that. So real-time intelligence into what's going on its own edge nodes. And then you've got liquidity with Magma, functions as a peer-to-peer clearinghouse for channel capacity. Okay, got it. Transforms inbound liquidity from a static requirement into a dynamic yield-generating service leased to merchants and service providers. Okay, great. So this must be, because I'm always thinking to myself, like, how is Amboss going to be able to make money to continue providing these amazing services? And this is definitely a way for Amboss to generate revenue, right? They can lease inbound liquidity, or probably inbound and outbound, to service providers, merchants. So that's pretty cool. Solving the custody yield dilemma with Rails. Alrighty. So this is interesting. Custody yield, because I wasn't able to easily solve for this. That's why I just opted for the custodial route, because it was just too difficult to make it non-custodial. And it was so much easier to make it custodial instead. So let's see, he's saying the stack description is right. RailsX won't be a typical exchange. It will be entirely self-custody with atomic swapping. He's saying, thinking of Dandelion. I don't think that was the name of it, but something close to that.
Was it Lotus?
It wasn't Lotus. It's a decentralized protocol. It might be built with Nostr. That could be why I haven't been able to find it. Tell me,
description is right. RailsX won't be a typical exchange. It will be merely self-custody with atomic swapping.
Right. Yep. So that's what the DEX is. And let's see, Blossom. That's it. Blossom. That's what it was. So that's the name of the decentralized storage protocol, Blossom. Yes, Chad. Yeah, you're talking about Blossom. Yes, exactly. That's it. Okay, so back on over here to the slide deck, the layer 3. So the custody yield dilemma. All right, so self-custody, you're holding, right? No yield, no risk. And unfortunately, your capital sits idle, right? So that's something to consider. Now, Rails, here's the sovereign yield layer. It says it automates deployment into Lightning, derives returns purely from protocol level activity. So that's routing and leasing, right? So the challenge for me when I was, building something similar to this was, how do I make the yield attractive enough for end users to incentivize them to want to use the product in the first place? It's talking about, so here's the custodial earn. I'm not sure if this is a hallucination or what, but it's saying,
I'm on the website and I was looking earlier, and it's showing currently like a 6% yield, annual yield on Bitcoin.
Okay. I mean, look, that is much higher than what I thought was possible. But routing by itself, I think is like negligible, but leasing must not be negligible. And then if you really want to get spicy with it, what you could do is, if you build a perps DEX on top of this, then those fees from traders, those fees could be routed to people who deposit assets into your protocol if you want to. So it says Rails, he's saying Rails maintains self-custody by using limited permissions, open and closed channels only. It fulfills liquidity leases, earning 1 to 4% APY. Routing, historically, yes, routing is less than 1%. So that makes sense now. So it's basically the liquidity. Liquidity is the liquidity leasing that generates the yield there. And I think it's going to be paid in both it should be paid in sats, but potentially you could also earn, USDT, like Taproot USDT. If you're providing liquidity in Satoshis and Taproot USDT, you could, depending on the architecture, you could earn Taproot USDT as yield also, which would be pretty cool. All right, so let's see here. Next slide. Visualizing the Lightning-native yield equation. Alrighty, so I'm not sure if this is real or not, but it's saying the total return, 5.5% average APR. That is pretty awesome, man. Pretty awesome. I love it.
I mean, on Bitcoin, I mean, that's about the highest that I've seen in DeFi.
Dude,
Bitcoin, it's like negligible, anywhere else.
It blows everything else out of the water, Mike. Like nothing else comes close to this on Bitcoin, especially not natively. Like no way. This is such a unique product. It really, really is. Okay, so you've got these custodial platforms. Now you got to think something like Wallet of Satoshi, or think the product that I was building. I was building a custodial product. So your default risk, if you're working on a custodial product, is very high, because if those custodial nodes and that client state goes down, well, sorry, you're kind of shit out of luck. So you've got a lot of counterparty risk. So that's just something to think about. And you've got to think about technical risk too. Like how qualified to build that product were the developers who ended up building it out. So you got to think about that with the custodial stuff. But Lightning native non-custodial products like Rails, this is super cool. Super cool. Funds in a multi-sig.
So it did say a hallucinated yield equation.
Oh, it did?
Yeah.
That's awesome. Oh my goodness. Yeah, no, these AI tools, man, they're so useful.
And hats off to Jesse for taking the time. I mean, all I did was just tagged him in an X post, hoping that somebody from the team would show up to fact check us, because
exactly.
Hats off to him to take the time to come here. I mean, it shows he cares about his product.
Yeah, man, this is great. I really do appreciate him hanging out in the chat for the last hour and a half here, just talking about Rails and Amboss, man, because this is super cool. And I can't wait to have the opportunity, Mike, to talk to him live and learn even more about Amboss and Rails, and maybe what the roadmap looks like, and what you see the future being for true DeFi on Bitcoin.
Your favorite words down there, flywheel.
Uh-oh. Yeah, sorry, man.
Sorry,
so, I mean, so yeah, that's kind of a pet peeve of mine, just because, in EVM world, whenever I see the word flywheel, it usually means
BE33 model and the
flywheel. Not necessarily just that. It usually just means like some type of scheme of incentives built on top of each other, where if one of those incentives fails, then the entire thing starts to work in reverse. Mm-hmm. But I'm not convinced that applies here on Bitcoin. So let's see here. It says Rails in the new exchange paradigm. So it says no AMMs. So I just want to see, is this accurate or is this a hallucination? Because the way that I built out the custodial product was I basically forked Uniswap v2 onto Lightning. So I used an AMM in order to essentially mint Taproot assets against Bitcoin collateral using Lightning's velocity of payments, almost like leverage. And then for the perp DEX, I built a central limit order book. Although you could potentially just trade against a pool. You could trade against the AMM if you wanted to. two different types of architectures. And then it says here, no cross-chain bridges. Looks like the Golden Gate Bridge right there. Beautiful bridge. But all right, I just want to make sure that this is accurate or not. It says here, RailsX trading demand creates a liquidity flywheel, increasing utilization for Rails liquidity providers and lowering trading costs. So that makes me think that if I'm trading on RailsX, then I'm potentially trading against a pool. That's the way it makes me think the architecture could be set up, but I'm not sure. Okay, so if we're talking about atomic trade integrity, we must be talking about HTLCs at some point. Yeah, you see that? HTLC is down there in the corner.
Yeah.
That's the all or nothing execution. So initiation, user initiates a transaction, paying themselves through a routed path. They send BTC. Okay, and then the routing, the payment enters the node. There we go. The payment enters the node. All right, that's the swap node. And then we've got in-flight exchange. The swap node facilitates the internal Taproot asset conversion, Bitcoin to USDT, using magma-sourced liquidity channel capacity. Okay, so that's part of the leasing. So that means you must be paying a couple of basis points to do that. And then here's settlement. Now your converted stablecoin is forwarded back to the user to close the loop. And that loop is atomic, meaning all or nothing. Awesome. Okay. Operational implementation, ecosystem access.
Real quick,
yeah.
It says the Rails LPs need some way to produce price quotes, which is essentially an AMM. There's a couple of different algorithms to choose from.
Yeah. Yeah, you see they do, because the LPs, the assets in a pool, don't know what the price is for those same assets in the pool external to the pool, unless you give them like an Oracle price.
Yeah.
Yeah. So yeah, there's a bunch of challenges here, a bunch of challenges that need to be solved for, and it looks like he's done a great job with his team solving for this stuff. So got node operators here. That's the Magma AI and Graph ML, I guess. Okay.
Is that what they're using? Is the graph?
No.
Oh, okay.
I think that this is something separate with a different, just the same name.
Okay.
And then it says here, retail users using ghost addresses. All right. And it says it eliminates the always online Lightning friction. Okay, great. And then global Forex, Magnolia, and bring in. So fiat on and off ramps, bridging US EU banking rails. So to me, this introduces potentially regulatory risk depending on the jurisdiction that they're operating in. Just thinking out loud here, because the fiat on and off ramps, although that is super important if you're running a business and you want to make sure that you're compliant. At the same time, I like to think about liberty. So let's continue on here.
Maybe we don't. Maybe they don't care about compliance because they're true DeFi. Self sovereignty.
Yeah, man, self sovereignty is the way to go. Okay, so it says the Lightning.
Real quick, he says
Yep.
Amboss doesn't touch fiat. We partner with others that do interface with fiat. So maybe that disconnect is what circumvents that need for compliance.
Love it. I love it. So here we go, the competitive landscape. So this is the Lightning-native advantage. So here's Lightning Amboss, right? The architecture type is layer 2, state channels, okay. The security model is native Bitcoin enforcement. And so liquidity management overhead. So yeah, but I think that Amboss as a business should be able to generate plenty of revenue to be able to manage this. So that should be no problem at all. Now, they're just taking a look here at a couple of comparators. So remember Stacks, Mike, like a side chain, and then Rootstock, which is like an EVM side chain. I don't want to use any of this stuff. I want to be on Lightning, and I want to be on the coolest ecosystem on Lightning, which it looks like that's Amboss. So regulatory moats and the 2025 Clarity Act, okay, awesome. Macro target decentralizing global FX. So this is the interesting thing for me about an architecture that I built on Lightning. Um, Imagine, you demand a payment in Satoshis, but your counterparty is only holding Taproot fiat. Maybe your counterparty is holding Taproot yen, okay? But you, to sell your product or service, you are demanding payment in sats. So you can invoice your client, invoice your customer, they have yen. But if you're using a node and client stack, you can essentially go directly from your Taproot yen to sats and pay in sats, even though you were holding yen in your wallet. So that right there, that is how Bitcoin and Satoshis can become the treasury asset for the world, where you transact in sats, but if you want to hold filthy fiat in your wallet, you can. And then when you go to
be a dirty boy or a dirty girl and hold dirty
I
fiat.
mean, yeah. So look, so he's saying this is enabling in-flight currency exchange, all thanks to Taproot Assets and Lightning. It's exactly right. That is exactly what this does. And just imagine being able to use, from your Lightning wallet. If you got in your Lightning wallet, maybe Mike, you're living in Japan, right? We've been talking about that a little bit, and
Yeah.
you're holding yen in your Lightning wallet, and you want to buy something in Brazil, or maybe you want to buy something somewhere else around the world, and they are demanding payment in satoshis, but you're holding yen. That exchange can be done atomically on Lightning, and all of a sudden that turns Bitcoin from just a store of value into a real treasury asset. So really, really cool stuff here, man. Yeah, I love it. All right, synthesis, the Amboss liquidity flywheel. Okay, so RailsX trading volume generates routing fees, that generates Rails yield, Magma liquidity, and the order book. Okay, we'll get back to that. The maturation of the Bitcoin native finance. So this is really what I'm looking forward to, Mike, in the next bull. This right here, Bitcoin native finance. Because up until now, Bitcoin was essentially, you bought it and you held it, and that was about it,
Well, that's that store of value, that kind of 2.0, that you were going over, and whereas this is moving towards a 3.0, where you can actually churn that liquidity or that value and actually use it as a medium of exchange to earn yield, to do true DeFi, and natively on Bitcoin without using a wrapped version, like CBBTC or WBTC or anything like that. It's native Bitcoin. So no, I
right.
mean this. I definitely, even not being a subject matter expert, I'm definitely seeing the value here.
100%. And so you see Jesse's last message there, that they don't have an order book. Yeah. So sometimes these AI tools just hallucinate. So just really appreciate it whenever it can be pointed out that, hey, the content that I produced or that we produced, had errors in it. I really want that to be pointed out. So I appreciate Jesse for doing that.
Yeah, Jesse, like we're not like most channels here. We actually like it when our viewers, if we're wrong about something, point it out, and we're more than happy to be wrong. We're not an echo chamber here. We even assets that we're bullish on. Like I love Aerodrome. David's not bullish on it. It's
Yeah, not too
we love
much.
pointing out the pros and the cons, or the good and the bad about every project. It's kind of our mantra here.
Yeah, yeah, it sure is. And just taking a look and thinking about Bitcoin native finance into next year. So here's the thing: the Clarity Act. It remains to be seen exactly what this is going to actually do in the marketplace. But hopefully it ends up being a net positive. I want to remain optimistic that this could be a net positive. Okay, so that's number one. Okay, number two, stablecoin hegemony. Taproot assets are propelling Lightning past Ethereum and Solana as the dominant transport layer for digital dollars. Okay, so Mike, I did a deep dive. We did a deep dive yesterday into Tron, and I actually in the DeFi University school community yesterday in the early evening with a bunch of members, I went through and actually found out where all that USDT tether lives on the Tron chain. It's real. It's
Okay.
real for sure.
Okay.
Yeah.
I know that was a big question yesterday. Is we're like, where is all this liquidity that they're
Right. Where is
because
the
we looked at the
stables?
DeFi and like it didn't exist in the DeFi. We looked at at
Right.
all the places. So where did you find it?
Yeah. So basically, it's and I can bring up the research actually, but
I don't want to
basically,
get away from Amboss. We can we only got about 10 minutes left, but I was just curious where is it at?
right. So the USDT on Tron is 90% of it held by institutions and
It's
centralized
state.
exchanges.
Oh,
No, so that I'm talking about USDT. So the
oh,
USDT,
gotcha. Yeah.
yeah,
So it's
yeah.
on exchanges.
So it's and basically, bro, it's like a Binance chain. That's basically what it is. Like
Okay.
Tron, it looks to me like 60% or 70% of all the USDT volume on Tron comes
Yeah.
from Binance. Um, and most of the USDT itself is just held by either institutions or centralized exchanges on the Tron chain. But the way that we got into this was talking about Taproot assets. And
Mhm.
the only reason that these are, kind of similar is we're talking about stable coins here. Okay. We're talking about digital fiat. It doesn't have to be just digital dollars. It could be literally digital anything.
Yeah,
So,
digital
Taproot,
euro, digital yen, digital real, whatever.
yeah, whatever your flavor of dog shit fiat is. you know?
Whatever your preferred flavor of dog shit is.
Yes, I will have the peanut butter. God. So here we go, dude. Taproot assets, though, it really does. Taproot is a huge upgrade because it gives Lightning the ability to, supersede Ethereum, Solana, Tron as a transport layer for tokenized assets. So when I say tokenized assets, people are always going to think, oh, well, don't you mean stables? Well, no, not necessarily. I
Oh,
could mean,
it could be real estate. It could be commodities. It could,
right,
anything. Any RWAs. Any tokenized real world assets.
right, exactly, man. So, you could end up owning your house
Ew.
as a tokenized Taproot asset denominated in Satoshis.
I don't even know if this is a thing. And it's sorry to derail you a little bit. I'd be interested to ask Jesse, like, is there a way that this could actually be onboarded to Canton to where it would onboard, this Bitcoin DeFi and this Bitcoin native infrastructure into the traditional finance system?
I don't know. I think that there are um, two systems that operate in parallel, and I think there probably could be a bridge built between the two.
I don't even know if that's something that they'd be interested in, but I just my gears started turning, and I was just wondering, as far as because there's really nothing out there institutionally for Bitcoin, and these like ETFs and all these different institutional offerings and holdings and master as far as strategy and things like that. So yeah, it just something that might be interesting.
You see what Jesse said? Anybody can create a token on Bitcoin. It's just what is it backed by? So here's something interesting to think about. On Lightning, And I've spoken to a couple of developers about this, and they kind of pushed back. And so I want to just see what Jesse thinks about this. Is it true that on Lightning, the velocity of payments can act almost like leverage? And so the way that I was thinking about the AMM that I built was that you could essentially mint stables against Satoshis using the velocity of payments as leverage. So if you've got one BTC on a couple of different nodes, then because of the velocity, that could act like more than one BTC. So that meant to me that you could potentially mint against one BTC an additional one BTC worth of any type of
So
tokenized
almost
asset
like
you
an
can imagine.
arbitrage.
It's more like creating money out of thin air. And that's why, he said, what's it backed by? So, if you're going to mint a Taproot asset, what is it backed by? Is it backed, if it's a US dollar denominated stablecoin, is it backed by treasuries? Is it backed by cash in a bank account somewhere? Or is
Oh,
it just algorithmic?
he says our stack can connect to anything that accepts Lightning. That includes Coinbase. So yeah, I mean, it looks like there is a bridge that can be built, to traditional finance and things like that.
Yeah. Yeah. So, I mean, that's just, connecting into Lightning. And so he's saying, my sense is that you could create a futures market based on the utility or velocity. Yeah. I mean, I think that you could actually mint Taproot assets using the velocity of payments as leverage on the Bitcoin that you're holding on a couple of nodes. That was my understanding, but I did get some pushback from a couple of developers in an in-person community here in South Florida. So I'm not quite 100% positive about whether that is possible or not. And yeah, what I really like here is moving into the next bull. And speaking of the next bull, why don't we take a look at some charts? Let's take a look at some charts here, and let's talk through the next bull for BTC. So I want to begin just by zooming out to a weekly. And whenever I see a pattern repeat over and over again, I tend to take heed. So notice if I just use the 2017
Hey
highs.
Jesse, have a good one. Yeah,
Thank you.
definitely let me know. Your schedule. It'll get you dialed in, get you on. It'll get you on an episode after the conference, and whenever you guys are ready for the announcement.
Thank you, Jesse. Appreciate your time, man. Thanks for showing up. So check this out. If we're just taking a look at this level back in 2017, use that as an anchor, and then drag it across the next higher high, extend to the right. And that turned out to be resistance. So that tells me that this trend line during the next bull is likely to be a level of resistance. So irregardless of where we get down to in the bear, during the next bull, which should end around 2029, I think we're likely to get up to at least 160K on BTC, at least. And what does that mean? Well, 160K on BTC, if Bitcoin dips down to 30 or maybe 35, something like that, and then we get a run all the way back up to 160, that's a 3 or 4x. Now imagine if Bitcoin actually ends up breaking out above resistance during the next bull. And we're talking about over the next 36 months. So imagine if Bitcoin's able to break out above this level of resistance because of projects like Amboss and Rails and real DeFi on Bitcoin. Real utility generates user growth, and that generates number go up. Maybe we get a breakout. If we get a breakout, all of a sudden we can start talking about 200K Bitcoin or even 300K Bitcoin. If we get real euphoria again during the next bull, because there's true utility for holding BTC and operating in DeFi on Bitcoin, and that drives much more user adoption, well, then maybe those, what seemed to me like pie in the sky targets during the last bull, maybe we see that stuff get hit during the next bull. So you could start to think about 250. If we get a breakout here, then the sky's the limit at that point. So that's just what I'm thinking about moving forward, Mike, is where are we going to go from here over the next 36 months? That's what I'm thinking about.
Absolutely. Well, we've hit time. Let's go ahead and start wrapping up. But I do want to address this question. So somebody was asking me about DAG, Constellation DAG in the chat, and where's it at? Oh, here we go. So Leon says, "What are your thoughts on DAG?" And so basically, I just let him know that I sold all my DAG, and let him know I'm bullish on the company, not the token. Something that we're really emphasizing here on the channel, and not to say that we're right, but this is just my thesis that I learned from David that I feel is very important, is the tokenomics of these tokens that we invest in. You can be bullish on a company that's behind the technology, like Constellation. They have contracts with the Department of Defense, and they're actively using the tech and things like that. Very bullish on the use case. However, if you look at the tokenomics of DAG, for instance, or XRP, or many of these other legacy tokens, there is no mechanism in place where that potential revenue or profits are shared with token holders. These are not securities. These are not stocks. They have no legal obligation for price to go up, or for them to work on the price going up. So, we have to understand that aspect. In the past, a lot of these projects or these tokens pumped because of speculation. People invested in these speculating that the price was going to go up, and that's happened, in the past, because it was mostly retail, investing emotionally. But I really think as we move to a utility market, not a speculative market, that we're going to have to mature as investors and understand the underlying tokenomics of these projects and how it is that potentially revenue through burns, through lockups, through buybacks, that there's things in place that take tokens out of circulation or somehow allow us to benefit as well from the profitability. Otherwise, you're holding a meme coin. So
Yeah, I mean, look, the bottom line for me is if a protocol isn't generating revenue, then I can't touch it. If a protocol is generating revenue, but they're not returning those revenues to token holders in some way, can't touch that either. So, you need to find the projects that, have created these tokens where the projects actually make money and return those revenues to token holders in some way.
So, like you said, not financial advice. Some of the ones that I'm investing in is Canton Network. I see them building real infrastructure and getting real adoption. So, no guarantee that the token price is going to go up, but there is a burn mint mechanism in place, and it's getting closer and closer to equilibrium to where there's going to be more burn than minted, and potentially that's deflationary. Yada yada yada. That's one that I'm looking at. I'm personally bullish on Aerodrome because of their lock, where they lock or stake the majority of the tokens that aren't paid out to those of us that also stake and lock. So potentially that can be deflationary. 100% of the fees generated on the platform go into that process. So that's another one I'm bullish on. We've seen Hype is a very good platform and making all the right moves, and they have things in place in their tokenomics to where some of that revenue flows back to token holders. So these are the projects that we have an eye on, and all of these, not Aerodrome, but Canton, Hype, and Tron have all outperformed Bitcoin. Tron has held up the best in this bear market. against as far as its price appreciation. It hasn't given back hardly any in this pullback. So these are the projects that we're focusing on here on the node, is strong fundamental projects that allow token holders to share in the success of the underlying business. So that's just our thesis. But David, what's your closing thoughts?
I say yes, I agree. that's basically it, man. Yeah, I'm just thinking to myself, where do we go over the next couple of months? That's what I'm thinking about here. But yeah, no, I agree with you, Mike. I think that there are very, very few projects out there that have tokens that where the project makes money and they return that money to token holders.
Yeah.
So very, very few of them. Most of crypto is some type of fugazi, where it's not real. It's vapor. So finding the tokens that are real, it's kind of challenging, but we do our best to present that stuff to everyone here every single day. And we're always going to present, all sides, like all of the information possible, And Ellie's like, it's a fugazi, it's a fugazi.
Fugazi, hey, forget about it. So no, it's and yeah, and I can't stress that enough. It's we are never going to we don't accept, even when we have Amboss on, we're not, it's not paid, we're in no way are we compensated or paid to have them on or to paint a pretty picture. We're going to show the good, the bad, and the ugly on every project that we highlight, here when we do our deep dives. Again, that's I always bring up Arrow just because there's a very strong contrast in my bullishness and David's bearishness on that one. And but he is right, about a lot of his points. The flywheel. I'm glad that they're getting moving away from that flywheel in the new platform, because he's right. That flywheel that works for us can work against us if the situation changes, or the aspects of that flywheel move against us. So it's important that we're very realistic and unemotional about our investments, that we don't get stuck in these echo chambers and that confirmation bias, that we just seek out information that supports what we want to believe. We need to constantly challenge and seek out information that oppose our thought processes, because that's going to give you the bigger picture. And that's what got me out of XRP. That's what got me out of DAG. That's what got me out of a lot of other tokens that I held, HBAR, XLM, a lot of those ISO coins. So, and I got out of those at a profit because I started to look at them more critically. So anyway,
100%.
All right, what do we got going on the rest of the day? So the rest of the day we got Jeff that's going to be coming on and doing the blockchain report, and then later on at 1 p.m. Pacific, 4 p.m. Eastern, you and Ellie are going to be on doing the market wrap up and the live coaching. And
so
then
today we're gonna go through providing liquidity. That's what we're gonna do today.
Yep. Nice. And then tonight we have me and Jeff on Crypto and Chill. So there's still a lot of content left here on the Node Network. So if you want, tune in. And until next time, Veteran Crypto out.
Peace.